Alt season 2025, could it be happening today? Because lots of people have got their own indication for alt season. Lots of people in December 2024, they confirmed that that was alt season. They confirmed that when 75% of altcoins are collectively outperforming Bitcoin for a period of time, that is alt season. I edged caution, guys, and now we're here. We're nearly there as far as my metrics are concerned. What did we need to happen? Anyone that's been on the channel for a while now, we know ultimately we need that big drop in dominance. We need USDT dominance to fall. We need Ethereum to start outperforming Bitcoin. We need others to start outperforming Bitcoin. And then the big confirmation is a break and a close of the previous all-time high of total 3. That cements it, and we're currently testing that level now. So are we going to get alt season 2025 today, or will we get a pullback before we get a push up before all-time highs? And I'm Keith. Welcome. This is the Crypto Bullseye channel. Thanks for watching. We're talking about alt season 2025. In fact, we'll say it a couple more times. Alt season 2025. Alt season 2025. If you say it 3 times, it might actually happen today. That's the plan. But seriously, we've been looking collectively at a picture of a bunch of charts to help us understand one thing. Where does risk lie at any given time? Where is the flow of money? Are people off risk? Are people on risk? Are we going through QT? Are we going through QE? Is the interest rates high? Interest rates low? All of these make a difference as far as where the flow of liquidity goes at any given time within the economy. So we looked at the charts. What are the charts we looked at? The first one was Bitcoin. Why do we look at Bitcoin? Because Bitcoin is the least risky asset within the whole of the crypto space. How do we know that? We look at the dominance. You can see that Bitcoin is 57.47% of the whole of the crypto market cap combined. That's everything against Bitcoin. Bitcoin's the market leader. That's the least risk asset. Bitcoin has had a bull run for 3 years. Now what's happening? We've had a breaker trend. That's give confidence in the market. We've taken back the 50 period moving average. That's give confidence in the market. Bitcoin has slowed down. You can see it's not putting in new highs. It's not putting in new highs. It's slowed down. Why is that? Because it is time for the flow of liquidity to start coming out of Bitcoin and to stop the inflows going into Bitcoin, which causes a double effect, and then coming out of off risk into more on risk. And what was the least risky asset within the whole of the crypto space without Bitcoin? This is what we've been talking about. We've been following this for a long time. This is how long we've been following it. This is Ethereum against Bitcoin. Why is it important? Ethereum's the second biggest market cap. It is by a long shot, nowhere near as what Bitcoin is, but it's still the second biggest market cap. So I'd said something was changing here. Looked like we'd bottomed out. We come back, we tested this previous lower high, and then we put in a higher high. And I'd said, and I created a video, if you bought Ethereum at 0.02302 and you sold Ethereum at 0.04604, that's the equivalent of you getting a half price Bitcoin by using the second least risky asset within the whole of the crypto space to be able to get that half price Bitcoin. And it's nearly complete now. You can see we're getting a breakout of the pennant, breakout of the wedge, should I say, and a move to the upside in Ethereum. That's strong. Next thing that we were looking at is the S&P. Now, we look at stocks. Why do we look at stocks? Because it is the finance web. It is the flow of liquidity. And when you talk about crypto, crypto's got a big market cap. When you talk about crypto in comparison to the S&P 500, stocks in general, it is a drop in the ocean. So you need to look on the macro scale. People that are outside of crypto, are they on risk? Are they off risk? And the S&P is putting in new highs. It's putting in new highs. It's putting in new highs. So we knew that the least risky asset within the stock market, within the US stock market, the S&P, that was running. That was putting in new all-time highs. That's confidence. So when people get confidence that the flow of liquidity is going into these stocks, then they can go into higher risk stocks. So that's the Russell 2000. And we've been talking about this for a long period of time. Russell 2000 has just been breaking resistance, breaking resistance, breaking resistance. And look where it is now. It's testing its previous all-time high. What else is testing its previous all-time high? It is the total 3. We're going to talk about that very shortly. So S&P strong, putting in new highs. Russell 2000 running up towards its previous all-time highs. So how can you prepare for this? How can you plan for this? And are we going to crack through into alt season today? Because ultimately, one thing that happens when you come back and you knock on a ceiling, you get sell orders at that ceiling. And when you get sell orders at that ceiling, you expect a little bit of a pullback before you can coil up, have enough momentum to be able to push through that all-time high. So all eyes are on the total 3, but we did need a couple of other things to happen. We needed this. US dominance, USDT dominance to start dropping. People start spending their dollars. People start putting dollars into stable coins and then spending it on altcoins. What does that do? Increases the market cap of the altcoins, decreases the market cap of USDT dominance. What does that do? creates a surge of liquidity outside of the dollar into high risk altcoins, putting their market cap up and pushing the total three towards its all time high. So, can you see why I'm excited, guys? I've said it. Once we get a break, once we get a close of the previous all time high of this total three, all the way up here, that's my alt season. That's my confirmation to start scaling out the market slowly 5%, 10%, 15%. If I've got 20% left in the market and the market comes down crashing, I'll be a happy man because ultimately we can't pick them tops, we can't pick them bottoms, and nobody knows unless you actually can predict the future. And unfortunately, no one can. So, can you see why I'm excited? I'm going to monitor this with you guys today. Get yourself in the Discord group because that's where we're going to keep on top of all of these charts collectively. I'm going to be doing Polkadot next. So can you see why it's an important time for us now? We are on the edge of confirming that we're going to get an alt season 2025, the thing that nobody believed in, and it's about to happen. And it's about to happen very soon as far as these collective charts are showing us and the picture that they're giving us in accordance with the risk curve. You can see, guys, when you look at the Russell 2000, what's happening down here when you've got a V-shaped recovery. We got hints that we were going to get QE. We got prices built in that the Fed was going to start cutting rates rather than holding rates. And when you start cutting rates, that gives one thing: reduced interest rates. When you've got reduced interest rates, it has a double prong effect that mortgage payments, they come down, giving more households more money. And then also it allows more borrowing because people that wouldn't borrow at high interest rates and now looking to borrow at lower interest rates. So what does that do? Puts money into the economy. So you've got, firstly, cheaper mortgage payments, households having more money, they can go on risk. And then secondly, you've got the thing that actually drives the market more than anything. You've got the flow of liquidity going into new loans, going into new assets, and that is really going to drive the market. So we want borrowing. We want the M2 money to supply to keep going up. We want the world to keep printing money. Sounds like a bad thing because they're deflating our existing currency, but we're all in here for the one thing. We're here for crypto. So what does it do? It pumps your crypto bags. And that was a little bit of a rant from me, guys, but let me know in the comments if you did find this useful and if you did understand why we look at these pictures collectively, we look at these charts collectively to understand exactly when is the right time for an on-risk rally outside of crypto, inside of crypto. Let me know in the comments if you found it useful. I'll see you in the next one.